Welcome to XM.com for the weekly outlook. I'm Christina Marujos, and joining me today is senior investment analyst Rafi Boyajian. Rafi, we have a very busy week ahead indeed. I feel that data lately, though, is not the driver in markets. Rather, policy decisions seem to affect risk sentiment. Now, the Bank of Japan is only the first central bank to meet this coming week. Japan declared a state of emergency recently due to a second wave of infections of the coronavirus. However, the Bank of Japan seems to have almost exhausted its stimulus ammunition. What do you think we'll see at Monday's meeting, and how will the yen move?
So that is right. The Bank of Japan already had a massive stimulus program in place before this crisis began. But there is a lot of talk in the markets that the Bank of Japan may beef up its asset purchase program at its meeting next week. It may possibly remove the cap on how much government bonds it's allowed to purchase. So therefore, that would in effect mean unlimited QE, and also they may double the amount of commercial paper and corporate bonds that it's currently purchasing. Those, of course, were measures that they had launched at the emergency meeting back in March. But even if we do get all these announcements next week, how much they will affect the yen? Well, probably not a lot. The yen, of course, is mainly driven by risk sentiment. We may see some knee-jerk reactions, but other than that, if the yen does come under pressure, it will probably be a very limited downside move.
Now, let's move into Europe, because this week's PMIs painted a rather grim picture. Flash GDP numbers are expected on Thursday, where again expectations are not very optimistic. Now, we saw the EU leaders seem unable to agree, for now at least, on coordinated financial action. Is there anything the ECB can announce at its Thursday meeting to help the Eurozone economy and the euro?
Well, once again, the pressure is on the ECB to come to the rescue. EU leaders, as usual, seem to take their time in order coming to important decisions. Now, the ECB had already announced a 750 billion euro asset purchase program in response to the pandemic. Now, they may decide, there are reports that they may increase this to possibly by as much as an additional 500 billion euros. That would take their total purchases to more than 1.5 trillion euros. But really, the focus is one. I think the consensus is that the ECB has stepped up. The question is now whether EU leaders will do the same. We did hear the EU this week deciding, approving rather, 540 billion euros rescue package for stricken Eurozone economies, but more needs to be done. And while they decided that they will do more, and possibly they may raise an additional total amount of up to 1 trillion euros in rescue funds, they haven't quite decided on the details. And until we get some decisive action from the EU, this is likely to weigh on the euro for the foreseeable future.
And finally, Rafi, let's have a look at the United States. It has a very busy calendar this coming week. We'll be getting preliminary GDP numbers for Q1, and the Fed will be holding its scheduled meeting on the 28th and 29th. Now, what could policymakers announce, and how do you think the dollar will perform?
Well, the Fed has already pretty much done all it could in order to save the U.S. economy from the worst of the impact of the coronavirus outbreak. Of course, we can't rule out any additional measures or perhaps some tweaks to its existing emergency measures. But on the whole, the Fed is expected to sit tight next week. But we will be getting updated economic projections by Fed policymakers. And of course, if we do see some grim readings there, we may see some growth jitters returning to the markets. And especially as we'll also be getting the advanced GDP report for the first quarter. US growth is expected to have fallen by 4.1% on an annualized basis. That would be the worst since the financial crisis more than a decade ago. And in addition, we will also be getting some other important data, such as personal consumption. So again, if we see a collapse in consumption, that could also weigh on risk appetite. The dollar, though, is more likely to gain if we see bad data coming in, as it continues to be the safe haven of choice. So if we do see some risk-off moves, the dollar will probably appreciate on the back of that.
Rafi, thank you so much for joining me. Indeed, we will have a very busy week ahead. And thank you for watching the Weekly Outlook here at xm.com.